Okay, so everyone's waiting for xAI to announce something massive. But the real trade is happening upstream, and you're looking at the wrong company. Here's the thing. xAI needs somewhere between 100,000 and 200,000 GPUs to compete with OpenAI and Anthropic. That's roughly 70 to 140 megawatts of continuous power, a scale that doesn't exist yet in one place. And the moment you start asking who sells those chips, at what margin, and who builds the infrastructure to house them, the entire retail narrative inverts. Invest Answers and the All-In guys both touched on this, but they buried the real lead. The leverage isn't on xAI itself, it's on the supply chain. NVIDIA, data center operators, power infrastructure, those are the actual beneficiaries of Elon's compute bet, not necessarily Elon. NVIDIA closed today around $219.22, up 3.43%. That's not because xAI announced anything. That's because the market knows if xAI goes live, NVIDIA sells chips. Regardless of whether xAI succeeds or fails, someone's paying $2 million per GPU. NVIDIA gets paid either way. Now, here's where most people get stuck. They think the trade is xAI will beat OpenAI, so xAI stock will moon. That's the retail narrative. But xAI doesn't have a public stock yet, and it might not for years. Meanwhile, NVIDIA has already sold the infrastructure. The real question nobody's asking, what's Elon's cost per GPU, and is that sustainable at scale? Because if he's paying market rate, roughly $2 million per unit for the latest generation, that's $200 to $400 million in chip costs alone. Add data center construction, power infrastructure, talent, you're north of $1 billion in year one. OpenAI had Microsoft backing it with strategic capital. Anthropic had Amazon and Google. xAI has Elon, and Elon's capital is tied up across Tesla, SpaceX, the Everything app. He's not exactly liquid right now. Invest Answers flagged this. Compute becomes the constraint, not the innovation. And whoever controls the compute supply, the chip makers, the data center builders, the power operators, those are your actual leverage points. So here's the play that's actually happening. Hyperscalers are locking in long-term GPU supply. NVIDIA is raising prices because they can. Data center stocks are moving because they know demand is inelastic. And retail is watching Elon's Twitter posts, waiting for the xAI announcement. One of those is the real trade. NVIDIA manufactures chips. They don't actually make them. TSMC does. And TSMC's capacity is already spoken for. Samsung's capacity is spoken for. So when Elon needs 100,000 GPUs, he's not buying from inventory. He's waiting in a queue. Same queue as Google, Meta, Amazon. The second thing nobody talks about, power. 100,000 GPUs pulling 70 megawatts continuous is not a problem Tesla can solve alone. You need regional power infrastructure. You need utility partnerships. You need a location where 70 megawatts of new demand doesn't trigger a brownout. Texas can handle it, but so can Virginia, so can South Carolina. Data center operators in those regions are already raising their prices because they know xAI and everyone else is coming. Think about it. Tesla's Supercharger network handles maybe 200 megawatts total across North America right now. Elon's asking for 70 megawatts in a single compute facility. That's a third of his entire charging network's capacity in one building. And that's before the second facility, or the third. Here's the all-in take that stuck with me. They said compute is the moat, not software, not architecture. Compute. Whoever can lock in GPU supply and power infrastructure wins the next 3 years of AI. And right now, that's not xAI, that's the suppliers. So if you're retail and you're bullish on AI scaling, you're not waiting for xAI's IPO. You're buying data center stocks, you're watching power utilities, and you're asking which chip maker has the best contract terms locked in. Now, the bear case. Elon's been behind on timelines before. Dojo, the custom chip play, is supposed to be competitive with NVIDIA in 18 months. That was 3 years ago. Maybe xAI never materializes at scale. Maybe the compute he builds gets repurposed for something else. But even in that scenario, someone built data centers. Someone laid power infrastructure. The supplier still got paid. The real trade is, xAI needs billions in infrastructure before it needs a single GPT killer. And those billions are flowing to companies with quarterly earnings and public stock prices. Right now. So here's the question. If you're bullish on AI scaling, are you betting on the company that might not exist as a public entity for years? Or are you buying the infrastructure plays that are getting paid regardless? Drop a comment. Which side of that do you lean on? If you want the infrastructure angle on Elon's bets, I went deep on the power problem, and SpaceX's power problem is Wall Street's blind spot. Link in the description. More coming on this. And while we're on the subject of invisible infrastructure, polymarket traders were caught using an actual adjustable wrench to tamper with weather sensors in the Midwest. They were trying to rig bets on rainfall predictions for agricultural futures. The CFTC is still investigating. Humans will literally modify the physical world to win a crowd prediction market. That's our baseline now. Okay, that's a wrap. Subscribe for the daily market brain dump. Have a good one.